So coming to risk management. Risk management does not mean that the risk is eliminated. Risk is still there, but under control. In markets, we are applying capital, so we need to look into capital risk. Capital risk can be monetary as well as emotional capital. Now, this is what most people ignore. Markets are such a place of the greed and fear magnetic field that everyone's first intention is to make money. Now the first intention is to make money, and markets first intention is to make you lose money. Now obviously somebody enters the market, gets 2 or 3 trades right, there will be a time when he gets 10 trades together wrong. Now what happened is he has lost the capital. Slowly he learns one thing: apply stop losses and protect the capital. And then he learns that risk management is a very important part of trading. Yes, it is an important part. Now how that learning process will go is what stop losses to keep. Make the stop losses shorter. Reduce the size of your stop losses. Yes, that is a logical reply, that reduce the size. But is it viable to reduce the size? Because is your strategy back tested for that purpose? And is your strategy that dynamic that it will be able to adapt the current market conditions and still stay with that small stop loss? Or you are just making a small stop loss because now you have learned risk management? So the first part is you don't know about risk management. The second part is we learn about risk management, but it is always looking for smaller stop losses without any reason. And that and how it happens is you buy at a random place and then you put a random stop loss, and that random stop loss is generally the previous day low, the previous week low, the previous candle low. And then what happens is within 15 minutes that stop loss is hit, and then we say that our strategy is not working, or maybe these guys are very clever. The first answer that comes is these guys are very clever. The moment we punch a stop loss there, they take it out. Those guys are not clever. We as a herd think in similar terms and put stop losses at mechanical references. Now putting those stop losses creates liquidity there. And when there is liquidity, they can see the order book and they come, obviously they want to buy more. So the only way they can do that is trigger your order. If they cannot trigger your order, they are not getting enough sellers on the higher side. So that gives you another idea that if they are hitting your stop loss and instantly reversing, that means their liquidity hunt on the lower side is complete and they are looking for much higher liquidity at higher levels. Because if they would have got liquidity in nearby, then they would not have come to hit your stop loss. They have come to hit your stop loss and it's immediately reversing. That means you don't want to still miss that trade. You want to re-enter that trade because the chances are very high that there is no liquidity on the upside and the auction will keep on going higher till it finds liquidity. Now liquidity is sell side liquidity, obviously on the higher side. So just by controlling capital risk, the most you can do is get a bit artistic with your stop losses. Now this word might look very odd, artistic, but after all it's an art. If it was just statistical, then again it's very easy to program, because everyone can hire a programmer and say that okay, make this formula and I want to trade based on this from tomorrow. Everyone will do that. It's not going to work, because that means the entire herd is trading at that point. And if entire herd is trading at that point, there is no edge to it. Now, along with that capital, when you are losing capital, that loss is bearable because you have defined what you want to lose And after defining, after going through all your risk parameters, your capacity, you have decided that okay, out of 10 lakh, if I'm losing 1 lakh, it's not a problem. The problem will arise when you lose that 1 lakh in multiple trades. On the first trade, you will lose 20,000. On the second trade, 30,000. Third trade, 10,000. Now, what has happened? Your capital has still not reached the limit that you want to lose, but your mind has reached the limit, because in every trade you are anticipating that this trade will be profitable. No, okay, let's trade another one. This will surely be profitable. When multiple trades don't come in profit, you are slowly and gradually losing your emotional capital. Your mind is lowering the confidence in each trade. So by the 9th or 10th trade, you would still not have lost 1 lakh, but your mind is now not ready to accept that you are wrong. That is fine, but there is always a tomorrow. Now you have lost that hope, and that is the time market would start trending on your side. So you are going long at every price break and your stop loss was getting hit. The 10th time you gave up because you had lost that emotional capital. You still have 9 lakhs, more than 9 lakhs balance, because you have still not hit the limit, but your mind has given up. Your psychology now does not allow you to trade. And that is the point where the market will now not come to hit your stop loss, start rallying. And what happens is, again, the same thing, repent. Wish if my 9th or 10th was saved, I would be in this trade. And then what happens? In the evening, we talk about that. Today morning, I missed this trade. If I would have done this, I would be in 10 lakhs profit. Yes, obviously, but the fact is I missed that trade. And we are talking just because we cannot accept that. Otherwise, we do not need to talk. We are talking to get support from that other guy. That, oh yes, you are damn right. You are so precise in your entry. It is these algos that are hunting your orders. So he gives you that consolation that you are still right. It is those algos who are wrong. Till this mentality stays, there is no way to become a good trader. Now this might sound very harsh, but it's a reality. So emotional capital is as important, and in fact more important than your trading capital, because trading capital you can define a risk on the terminal, but emotional capital there is no defined risk till you are not able to develop a habit of performing like that. Now we can further divide it into two parts: information risk versus price risk. Now information can be of various types. One information is that you are waiting for a confirmation. Like we saw in that earlier trade setup that we were watching, that if we anticipated and entered, the risk was minimum. So there was information risk because it was not a confirmation yet, but you felt that it was a nice location to enter into a sell. Similarly, on that, before that open drive, you thought that this is a nice location to enter. There is no confirmation yet. So that confirmation is a part of information. You don't have information yet. So you are running a risk of information. There is an information risk, which again correlates to your capital risk as well, because that means you have put your capital at stake and you don't have a defined stop loss yet. So either you have a defined stop loss plus confirmation, which is both type of risk mitigated, or you have either of them. So we need to find a balance between those. What do you want to do is completely upon you, that how do you want to deal with that type of risk. So to manage monetary risk, we need to decide the maximum loss we can afford in a single trade. Stop loss is the term that we use to define that maximum loss. Now, stop losses can be a fixed price, can be volatility based, or can be structure based. So fixed price is like most people use, below the high, above the high, below the low, below previous 2 days low, above previous 2 days high. So they would keep a stop loss there. That is one type of fixed price. The other type of fixed price is that they enter a trade and think that I don't want to give more than 10 points. Now that doesn't define anything. You are entering in a bar that created a range of 40 points. You are entering at the mid of that bar and you think that the market cannot go 10 points higher is foolishness. Because the market might go just below that bar high or just above that bar high and fail, and it will hit your stop loss. Just because you decided that you can bear a 10-point risk does not mean that that stop loss is a valid stop loss. But because people learn that, okay, we have to protect risk and keep stop losses, so they just randomly keep stop losses. And that is the evolving stage of the trader. Because obviously first is analysis. Once you get good at analysis, you will start trading based on that. Once you get good at trading, you will want to improve further. And that time the losses will be a result of these kind of mistakes. And that is the time when we should realize that, okay, there is something that is going wrong, and that something is that the market does not care where your stop loss is. The market is still going to do what it wants to. Now the other type of stop loss is volatility based. Volatility, you can take the VIX and multiply it with some number. You can take ATR. So if it goes beyond some period ATR, that means that it's going to go on that side and you want to get out of that trade. So that is another way of keeping the stop losses. But the problem with that is also same. If you are looking at a historical volatility and ignoring the current market conditions, what if the historical volatility shows up after 10 days? Because if you are using a 30-day, before a visible change comes, a actionable change comes in that ATR, by then the market would have already changed because you are using an average. So you ignored the market generated information. So that is not worth it, because if you are trading based on AMT, if you are trading the order flow, you are already getting information at every tick. There is information generated, and ignoring that information is not worth. So we need to internalize every information that is coming in and filter it out. Instead of going for a volatility stop loss, we should look at what is happening in the now. Is this going to hold or not? If it's not going to hold, set up a 10-point questionnaire that, okay, if the market has given a 10-point range in 1 minute, is it going to go higher? If you get a yes, mark it with a yes. Then if you are saying that after the confirmation there can be a test again, so again develop a questionnaire that what are the chances of a test? Is there a reason that a test should happen? If you are not getting a reason, then you should have a no there. And if you are not getting a reason, then that means your stop loss also should shift, because now you are dealing with that generated information, and like the ATR moves up with the price, your stop loss is moving with the price as per the generated information, but through your discretion. Now then again, another type of stop loss is structure based, and I generally prefer to use a structure based stop loss. Now a structure based stop loss is like we were seeing, that there is no supply there and you are getting a balance. the breakout of that balance, and that means that structure is very strong below. So if that structure is broken, there are high chances that the market will go that side. So I don't want to risk more than that. So that's why I'm keeping a stop loss there. So that structure based stop loss is one of the effective ways. If you are able to spot it right, that will be always minimal. It will give you a better entry also, and it will reduce losses as well. We are dealing with a secondary set of risk as well once we define the capital risk. So now we'll get into this detail, that the risk is information risk versus the price risk. So what was the price risk and information risk? We'll go into the detail of that. All important demand and supply zones, at all important demand and supply zones, if we are entering a trade in anticipation, we are dealing with information risk. On the other hand, if we wait for the absolute confirmation, we are dealing with price risk. And that is what we were actually discussing, that if you wait for the confirmation, the price will be too high to buy or too low to sell. So there needs to be a nice balance between this. So as a trader, one needs to balance between information risk and price risk by choosing an optimal position size and then scaling in and scaling out positions. Now, what is position sizing? Position sizing can be done in various ways. It can be dependent on the price stop loss, percentage of capital as stop loss, initial 50% position with a defined R multiple, and later scaling in when opportunity gets better and when information risk is mitigated. So in this case, suppose you are keeping a stop loss earlier, you thought that this trade might result into a 3R. 3R basically means you are taking a risk of 5 points and you expect 15 points. So you are expecting that sort of trade and you are entering just 50% position. And then when you see that now you have got a confirmation, your breakout has really happened now, then you scale in. You scale in the rest of the 50% position, because now you are paying a price just for the 50% and your information risk is completely gone, because now you have the information that this is a confirmed breakout. Now let's have a look at the calculations, what would happen. Now I don't know, many would be using the similar kind of strategy, but I just wanted to discuss, if anybody is not using or if anybody is not aware, then this I have already made this, so can have a look that how the capital changes drastically when you change the position and risk. So in this case, we have taken 10 lakh of capital. The maximum risk we are taking on the capital is 1%. In another instance, we take 2%, in another instance 3% and 4%. Now we are trading Nifty futures considering a price of 8,900. We are going long or short. Stop loss is 10 points. So the margin required will be 53,400, because currently the complete margin, so the span plus exposure margin would be 8%, and that comes to 53,400. Now how many lots we can trade in this capital? So we can trade 18.73 lots. When you trade 18.73 lots, and that means the round of lot size would be 18, no, not MIS, complete full margin. MIS would be half of this. So we are trading basically on a capital size of 10 lakhs, you are allowed to trade this many lots. But what would happen? Your risk is 10 points, so you are losing 750 on one lot, and you are losing 7500 on 10 lots, and rest of the 8 lots, when you add, your risk will go above 1%. So if you trade based on the capital size and do not do the position size accordingly as per your risk, what happens is you are taking unwanted risk. So I would prefer to again balance this between the amount of loss I am ready to take on the capital. Then I would enter the stop loss that I have as per the structure. So suppose my stop loss was 10 points, then what I would do is get a calculation that how many lots I can trade if I want to lose 10,000 only. The answer is 13.33 lots. So I can trade 13 lots. Now here what I have done is I have still cleared the first part. By trading 13 lots, at this stop loss hit, my loss would be contained to 1% of my capital. But on the other side, my entire capital is not applied at all. I'm applying just 6,94,000. And what happens is, suppose the moment, at times there will be times where my stop loss is, let's say, 18 points. Now I can trade only 7 lots, and that means I'm applying just 3,73,000. So if this much variation comes in applied capital, what will happen is your winning trades, suppose your winning trade was with a 18 point stop loss of 7 lots and you made 50 points on that. Now your losing trade kept on coming with a 10 point stop loss, but your lot size was 14. So you are actually losing 20 points. Though your stop loss was 10, but your position size has increased. So you are losing more. So there will be no tally. Every time it will keep on varying, and finally again the same thing, it will end up in losses. So what I try to do is get a balance between this to apply the maximum capital possible. So here what we need to do is, suppose my stop loss is 10, what I try to do is check how much I can give a leeway to apply maximum amount of capital. Yes. Apart from my PC, everyone can get everything. PC also I can give in case somebody is paying a premium. Yeah, with data, with the charts as it is. Because then I will also keep a challenge that this PC becomes yours only if you can beat my profit. Because if you are following my system and it's then you won't have any emotions also, so your profits should be greater than mine. Yeah, that is all sort of risks, and we are talking about risk management, so cannot do that. So to get this balance, we try to now we need to look at one thing. One is this loss. We don't know how many losing trades we will get back to back. So we cannot even, like, suppose to apply 10 lakhs, we can reach to 1.5% also. And we would say, okay, what will happen? Maximum I'll lose 15,000. But here see what happens is instantly your this goes up. Your applied capital becomes 10 lakh 68,000, which is not possible to be applied. So when you go to 1.4%, you are applying 9 lakh 61,000, but your loss is 14,000. How many times you can trade after that 14,000 is gone? So you need to deduct 14 from this 10 lakhs. Your capital left would be 9 lakh 86,000. Now again on 9 lakh 86,000, will you be able to trade the same quantity? Because see, if the quantity is varying a lot, that means end result would be losses. So what I derived is that there are chances after like trading continuously with the same strategy in a same manner with a same style, I could control my strategy, I could control the way I enter, I could control the way I exit. What I could not control is the change in the markets. And as the market changes, even if my historical performance says that I will be wrong 60% of the times, there can be a day where I am wrong consecutively for 60% of times. This time it is random. It's like divided across the entire trades. But what if I get back to back 6 or 7 bad trades with the same amount? So then my lot size will keep on decreasing. So what I want to always do is keep a provision that every time till 3 trades, I can still consider my capital to be the same. So generally what should have happened after, suppose this first loss 14,000 you took, your capital should reduce to 9 lakh 86,000. Right? Then what happens is your loss capacity, next time you are losing this much, but on the other hand, as of now, nothing has changed. So what I try to do is that try to find a balance between the risk which I am affording, which I am able to afford on the capital, and keeping in mind that the maximum capital is applied, and keeping just the capital which I want to lose in further 2 trades further, that also I am keeping free. So now let's go and have a look at that. Now here, this is the worst case scenario possible. A 10-point stop loss, how much or how many trades do you want to do consecutively bad trades where your account gets to 0? After 200 trades, if you are getting 200 consecutive wrong trades, your account goes to a point where you cannot trade even one lot. And there is no way, if any person is getting 200 trades back to back bad, it's like very early that that person should leave the markets, because then there is no chance that he might succeed anytime in life. That would be just a waste. If he is thinking also that he would succeed, there are no chances that he might succeed. Now, if this risk was 30 points, and this is not based on the, yes, I'm calculating like what we put in the sheet is always with the slippage, and my slippage is actually 3.4 points, because I am not trading with a discount broker, so my slippage is actually higher. For a day trader, I would say that will be actually at times too high. Mean, see, this is we are taking example, and because if I am doing that, I would take my example. But obviously, and that's why now I want to change this to 30, because there will be many people trading with this kind of stop loss, and this is deadly, because this stop loss is fine. What I am looking at is there is no way to get a 2 hour multiple in a day. So it becomes completely worthless to trade with such stop losses, because the end can be very deadly. Or now the second part is we'll also discuss how can that be tackled, because there we'll have to make a bit of modifications where we can get a balance between getting a bigger stop loss but still protecting it. This is just based on the total number of lots we can trade, and your risk is this much. Now in the second part we'll go and see the percent of capital stop loss. So I think, okay, let's do a poll for that in two parts, that what would be the stop loss that anybody would be looking at. So let me put a quick poll. Yeah, so as of now I'm keeping it for intraday. And also this is like the first part of the poll, because there is one answer required. Let us give it 1.5 minutes to get over. So once that is over, then we'll decide what has to be done. Can't be, because there are 31 votes already. Oh, is there a section visible in your, because I don't know how the participants would be getting it. but the voting has happened, so 32 is. Okay, seems there should be something maybe wrong, a pop-up blocker or something. Audio will come when I talk. So anyways, so maybe there are 9 people who have not got it. Let's end it. So the maximum number of people say that 10 point stop loss. So 10 point stop loss with a 1% risk on capital. So in case of so if the stop loss was 10 points, risk was 1%. Like earlier we put 10 points, but we didn't decide what can be the size as per the 1% stop loss. That time we were getting 200 trades. Now let's see how many back to back trades we can do. Back to back wrong trades. We have gone till 250 already, and still we can trade further as well, because we still have 81,000 left, and this will keep on going. Like this will keep till 300 you can go. But just to show that difference, that 50 trades have already increased by just putting that one criteria. Now let's go to another example, that as a trader everyone wants to, you cannot if you are a full-time trader, you cannot keep money in the account. You need to remove the money after a certain point as well. So somebody decides to remove profits after every 10 trades. So they also need to get something, some benefit, because if they are keeping the capital blocked, how would they survive? Because it's very easy, because many people say that okay, what has happened, drawdown came but then market went up, but what about your survival? When the drawdown came, that time you required money on at the end of that month, and how would you get that money if your drawdown is very high? And that is another reason why traders quit very early, because all this is not never thought of. Only thought that goes on is profit and loss. So in this case, now we'll add R multiple as well. So we'll take all the examples and see what could have happened. Suppose anyone's stop loss was 10. He is applying the highest capital possible with a R multiple of 3, which is achievable in a way, but very difficult. I would say a R multiple with a 10 point stop loss, a R multiple of 2 would be like just at the edge. Yes, 1:3. So R multiple is basically your risk to reward. So your risk is always 1 and reward is the multiple. So here what is happening? You are taking a risk of 1.4% of your capital and putting a stop loss of 10 points and trading the lots as per your position sizing calculator. And you expect for every 10 point stop loss, you are expecting a 20 point profit. And for every one good trade, you are expecting one bad trade. So see, here you have lost, here you have gained, here you have lost, here you have gained, here you have lost, here you have again gained. Now, if this strategy works, if this goes well, let's see how much we can withdraw over a period of time. And the criteria is we'll withdraw the profits and keep the capital after each 10 trades. A fixed number of trades we'll do and we'll withdraw the capital. So this calculation is already done and let's see the results. In 250 trades, you still have the entire capital balance and you have made a huge profit. The power of compounding has worked here. Your profits have gone to 16 lakhs after 250 trades. Now see how this psychological part plays. We are always after making huge profits on a single trade. Instead of that, 250 trades you can easily get in a year, and on 10 lakhs, if you are making this with the adequate R multiple, is what you require. Now let's also change it to a worse scenario than this. Then we want to see how much we can still remove. And see, when you are removing this capital, you are actually thinking of survival here. You might save from this capital which you have removed, or you might not be able to save, but at least you are keeping your capital intact in the trading account and removing the profits gradually and enjoying those profits. Now let's see, if the stop loss was 15 points and you just tried for a 1.5 R multiple, what would have happened? Now random. So you are losing 15 points for every 23 points gained. Yes, initial investment is same. Only thing that changes is your sizing. Now see, what happened is, the moment your stop loss went higher, your sizing changed to a lower capital application. And that means ideally every time only 6,12,000 was applied. You end up making 7,59,000, which is the now see the difference. What happened? You increased the stop loss by 50% and reduced your R multiple by just 25%, but your profits have decreased by 50%, more than 50%. Now this is a extremely boring part, because who would care to do all these calculations, and that too in real time? You don't. So, and that's the reason that one needs to decide. See, first is decide your strategy and your nature of trading, how you want to trade. Every time when you trade, what will be your stop loss? So you can decide the highest stop loss, because you might get lower stop loss every time, but you need to decide the highest stop loss that you are willing to keep, that you have identified that you are interested in trading all failed auctions. You are interested in trading everywhere a failed auction happens. The moment it fails above a previous reference, you want to instantly buy or you want to instantly sell. Depends on your requirement. See, you trade with 2 lakhs, will you be able to survive? No. And this is the worst part why traders are leaving. Like I come to know because the company is engaged into sub broking, and there I come to know people deposit 1 lakh, take MIS, trade 4 lots. Now a sub broker is always interested in brokerage. When I see that, I just call that guy and say that, see, this is my account number, deposit in that, I will give you interest. Now that guy is not going to do that because he has come with an intention to make millions. And for a fact, I could write on a piece of paper that if he is a brilliant trader also, he is going to get this capital to zero. The time is not defined. Maybe 1 or 2 months, maybe 1 or 2 years, but the capital is going to zero is confirmed. Because he is trading way above what he is permitted. On a 2 lakh, on a 1 lakh capital, trading 4 lots. See, the brokers will give you on a 1 lakh capital, they will give you even 5 lots, 10 lots, 20 lots also. They don't care because it's their job to make money. But this guy should know that if money making was that easy, then nobody would be quitting the markets and there will be no losers at all. Now tell the same guy, what do you do? That guy might be doing some business or some job, and ask him, what do you do in your business? Why don't you order suppose his sales, he's having a general store and he's selling 100 soaps in a week. So tell him that call for 10,000 soaps. You would say, no, are you mad? My sale is just 100 soaps a week. So in a month, I will require 400. What will I do with so many soaps? There he has perfect brains because he knows that that is a business and he cannot take leverage. Here he thinks it's a lottery. Leverage will be a game changer and he will become a millionaire. Risk reward is 1:1 would be bad. You will end up, because see, you will end up giving up. For not giving up, you will have to reach a stage where see your lot size keeps on decreasing. 10 point and you are willing to lose 1.4%. Here what happens is you can be willing to lose more percentage as well, because then your loss won't increase, but end of the day it will be a loss. Because for every 10 points you are losing 10 points. So slowly, gradually, your capacity to trade is decreasing at every point. And firstly, this is not possible because your applied capital needs to be in control. So again, you can maximum go till 918 applied capital. So 1.4 or maybe 1.5. No, 1.5 also won't work. So 1.4 is ideal. So this is the actual loss it will come. See, I'll show you what will happen with. It's very easy that what will happen if you have 2 lakhs. Actually, I should have made a column to change the capital. Then would be much easier. But this should also work. I think the formulas are set. Yes. Now you are trading with a, let's say you are trading with a R multiple of 3, then it works. If you are trading with a R multiple of 2, every 10 trades you are getting this much. If you are satisfied, works. You are able to trade 3 lots. Your capital applied is optimal, and end of 250 trades you are still like making 100% profit. Let's also go to, like, suppose you had a better R multiple, but I don't think that more than 3% R multiple in a day is possible. Yes, one losing, one winning. Okay, now let's go that you have 2 losing and 1 winning. So you are taking again the same, you are taking a risk of this, and you have a good R multiple, and your capital is 2 lakhs. If the capital was continuously applied, so even after, see, now this is a difference, that you are doing it as a part-time job, then see how it works. You are not removing the capital. The power of compounding allows you to keep a stop loss of 15, get 3 points. After having 2 bad trades, 1 good trade, you are still growing the capital gradually. Over 250 trades, your capital has become 577 because you didn't remove it. So this is one way of building that. Okay, you decide that you are going to do 100 trades without taking anything. So you do the first 100 trades, you try to perform, and you have got 1 lakh in your pocket. But is it possible or not is the question, because there will be, this is the profit, but you would have given your time, you would have wasted your energy, you would have wasted everything possible. And if the end result is 1 lakh on 2 lakhs, then I would say you look into your current profession. If your current profession is not as good as this, then no problem. If it's better, why to even get into trading? See, my reason of trading was that I randomly got into it because that time I thought that there won't be any choice left to do anything. But if somebody has a choice, then they should always like think, because you will be putting lot of time in it. And in case you are putting time for fun, then again it's not worth. Because for fun, go to a casino, one day finish it, and it's over. Either millionaire or zero. Now, slowly, I thought that this will get boring. So, slowly, people are leaving. Maybe one thing is because of the time. Okay, now let's stock will be, you will be like uh, I would say that a person having anything less than 20 lakhs should not ever think also of trading stock futures. See, what I'm talking is about serious trading. If somebody wants to still trade, there is no harm. The results, I can like from my experience, I can say it will be, end of the day it will be defeat. The market is there to defeat you constantly. You are playing a war. It's not easy to win this war. It's just the assumption, just a perception that you will make more money in stocks. No, you will lose more money in stocks. Now, what will happen is, on an average, I do like out of like 20 trading days, mostly like 3 trades a day. 3 good trades a day. At times, the total number of trades is 8 and 5 are flop. At times, total number is 6 and 4 are successful. So the average turns out, the profitable trades turn out to be on an average 3 trades with. Okay, now what will happen with part-time traders is that you can have a better stop loss. So let's look for the part-time traders, that you can have a wider stop loss with a wider R multiple, with a better win ratio as well. So this might even go to 35, this might even go to 40. And okay, for a positional trader, this 40 would again be not exactly 40, but an average of 40, because at times you might get an exit at 20. You would get a chance to look at it. At times you would have to wait and exit in a gap up or gap down at 60 points. So this would be the average stop loss that a positional trader would take. But on the other hand, in the gaps and all, he would win also consistently. So assuming that, okay, so we have an example. Let's take that example. Your SL is 50 points with a R multiple of 4 points. You expect to make 200 points for every 50 point stop loss, and with a success ratio of 45%. So for that, we should take this sheet. Risk of 2.1%. Your stop loss is 50. Your R is 4. With a success ratio of 50%, you are ending up with this. Over 250 trades, after removing at every 10 trades you remove, you are making 12,94,000. Which is quite achievable actually. But your number of trades would be very less. That's what I was going to say, that your number of trades would end somewhere here itself. And when your number of trades end here, end of the day you are just getting a nifty CAGR, which is not good for a trader. Either your number of trades should increase, or what you can do is your application can increase. So you can take a better risk so that your application increases. See, instantly everything changes. Because what happens is your okay, so your 2% risk, then your risk, your allowance is actually less than that. But you are taking a risk, so doesn't like, see, you have been doing it, then we can do a reverse engineering on that and we can get the results. Because if you are doing it, there is a chance that you already have a result on that. Yes, that's what I'm saying, that we need to find a balance between that max affordable risk where we can apply max capital. Because see, here your capital application is not possible with 2 lakhs. You are not getting any application at all. Only your max application is possible with a risk of 20 points on 2 lakhs with a 1.5% risk. Because what you are doing, 50 point, the moment this risk came and you are saying you want to risk 2%, your calculations might be right, 2% is valid, but then you are allowed to trade one lot on 2 lakhs. Because when you do that, what will happen is gradually you are getting 20 trades and you are making a like, if you get 30 trades, you are easily making a profit of 158%, which is like way more than any trader can expect if he is not a full-time trader. If he's a full-time trader, this would be very minuscule. Then what I would, for a full-time trader, what I would expect generally is 1.4% risk, a stop loss of 10, R multiple of 2 is what a full-time trader expects, and his trades would reach at least this point. At least this is the minimum criteria. If the full-time trader reaches this point with this kind of performance and make 82,000, it's worth being a full-time trader. Because then the moment you start increasing your capital, suppose you didn't take capital for 3 months and you are adding this profits, so at 100 trades you have got 82,000 extra, you are adding that profits. If you are trading options systematically, not as a lottery, no, on 2 lakhs you are getting way more than FD. You have removed 82,000 already. This FD will give it in and this 100 trades, no, 10 lakh, it will be like you are like the boss. You put 5 lakhs, then also you are the boss. Three lakhs you are getting after 100 trades. and that time you can have a better stop loss. Yes, obviously, like I would say, this is 1-to-1 winning, so a 50% performance. Now let's consider you were trading options, and there your premium is what you are giving, because you don't have to pay margin. So what will happen is your applied capital would give you huge lot size, because your applied capital goes minimal, and your, as per this risk, you are like getting a huge lot size to trade. Now if you can manage that, there can be no better profession, if and only if you can manage that, because the management would be so tough, because you will be dealing with at least 100 lots. Writing options the same. Writing options, you will have to pay the same margin, and forget about the credit you are getting, because you already, that credit is not the realized credit, it is just for the accounting sake, so your margin still stays the same. So in writing options, firstly, there is no chance that you can write options consistently with a 10 point loss criteria in NF. There you will have to scale in multiple times. Yeah, buying working better, but it is like the moment you lose control of your risk and the account is gone. Because see, as a human, whatever we talk, whatever we decide, there is no way that you will follow it 100% on the day. There is no way at all. Even if you apply a machine, the markets might change and your machine might fail to do that. Yes, means see, I would say a full-time trader starting should start with that. Then what will happen? His emotional capital will stay intact. OHL strategy means open high and low. Are you talking about open high and low strategy? See, what I mean to always say is, strategy should be devised as per your nature. It is not that this strategy is good or that strategy is good. Strategies, if made, are all good, because you would back test it, you would see how it is performing for a considerable amount of time, and then only you will apply it. So if it is giving a good result, okay. Also, always like be pessimistic about the performance, because if you are, I change as per capital throughout the month, on expiry day or month end, either of the two, whichever is like feasible, I end the, again reset the capital. Because earlier I didn't used to do that, but that time actually then the performance was going down, because when you see capital in your account, your risk automatically increases. If you are doing half at that, and 1:2, so basically your R multiple becomes 1:1.5, and your risk becomes 7.5, because what we consider both probabilities, that the your first exit is always positive and your second exit might turn negative, so we consider that probability. So only thing that changed is your multiple can, so you can make calculations for that. or this is the easier way to do that. And let's say that you also see, all this is your derived formula, and that is, see, traders are not willing to accept anywhere that we need to deal with the risk. The target part is not at all in our hand. To talk about a TSL is good, no problem about that, but as a while trading intraday, does your strategy give enough time to get a trailing SL? If yes, make the average less. So suppose your 10 point was initial and you think that your first exit is always good and your second would be on a trailing SL which is like above the cost. So your stop loss goes to 2. Now, while doing it, see what happens if you do that. If you do this, your lot size has increased so much that it's not tradable. So, because TSL is not what is defined from beginning, that is what you are talking is what will come after your trade goes into profit. So, only thing that will improve with your TSL is, let me show, let's make this 15 again. After you have a TSL, what will happen is for every one loss that we have calculated, your loss will reduce, and this will increase by maybe suppose we consider 50% of the trades are still wrong and 50% of the trades you are getting right with a TSL, half exit, and the rest is always without SL and above cost, then what we assume is this performance will increase by around 20%, because on the overall performance, those things will not make any big difference. It is just our perception, and I've been through all this. Like, I tried my best. Like, see, now from your talks, I can make out what is going on in the mind. The mind is saying, want to make money. The market is saying, I will not allow you to make money. Now, see, easy and easy catch that this is what I am seeing. Me 6 years back was same like this. So and that's the reason that only you can like make this happen. Until and unless your behavior does not accept and your behavior does not change, if I am going to say anything is not going to matter. Yes, and pre-decided, and that too, if I am not getting if I am not getting 16 points, and if I see a rejection at 14 and I am getting an exit at 10, I love that exit. Before my skin is peeled off, I want to exit. Because then staying in a hope that, oh, I exited at 10, see, now it blasted. But it could blast on the other side as well. The probability is always 50-50. And this was the great thing which I learned from FT. He keeps on, like, first I used to think, why does this guy keep on saying this again and again, probability 50-50, 50-50, and if it is 50-50, why do we trade? Then slowly understood that yes, the thing is like not to be overconfident and not to be underconfident. So keep a balance and keep on going up and up and up. if see now that might be my luck or whatever one can call it. I entered the film industry without any film background, and within I worked 2 years for free, and uh, after 2 years I could compete with people who were there in the industry for 25 years. Otherwise industry doesn't care, means they don't let you stand there. But I made a mark that I was able to do most of the Hollywood films shot in India, and my goal was there. I had a goal that one day I want to work with every Oscar winner, cameraman, and director coming into India. And finally, I made that goal successful by working on Mission Impossible, Slumdog Millionaire, and um, Letters. So, those were the three Oscar winning films made in India, worked on all of them. When I got that satisfaction there, I thought that okay, now I can pursue this career as well, because now it won't be a problem. I have achieved what I wanted there. Now coming to a very short and sweet trading mindset, which we were discussing again and again, but to be to just put it into words, because again the graphic would be read in a better way maybe. Now trading is a war, and either you win or you lose. Middle way is very rare. There are cases where people took the middle way, they exited much before and found out that this is not for them, and they just left the markets, which is very good. Because if someone finds in an early stage that he is not able to do that and he will not be able to do that, it's better to quit. There is no point fighting, because tomorrow if I decide to become an aeronautical engineer, I will not be able to do that. Hindustan Aeronautics might offer me a job, but if I go there, I know that I'm going to fail. Now, strategies, risk management, and position sizing can be automated. Capital can be infused, either your own or borrowed. But the mindset and the psychology of trading is what you need to develop. So, this is which no one can lend you. It's easy. See, you tell your, suppose there are people who face capital problems, that they think that I have just 2 lakhs. Yesterday Rishi was saying that if we have 10 lakhs, it will be very easy to make money. So what they will do, they will talk to 2 3 friends, and nowadays the value of lakhs has become so less that easily 2 3 friends will offer him 8 lakhs. So that capital can be easily borrowed. Strategies, very maybe one of the easiest parts, because there are so many automated strategies. Now you go to TradingView and subscribe, you will get like thousands of pine scripts. Buy above 5 EMA, sell below 5 EMA, buy at the crossover, buy at ATR, buy at super trend crossover. You will get like 1,000 strategies at least in a day. So that can also be created. No problem about that. Risk management, easy calculation. You take a Excel sheet, calculate, and done. Position sizing, also derived from the Excel sheet, that is also done. So all that is easily doable. But the mindset and the psychology Not possible. Only way to develop that is meditation, patience, constantly working towards a very focused goal. You need to have that feel for the markets. Now that feel, now very difficult to describe. Like, see, from the questions today, which kept on popping during all these hours, everyone is trying to look for something outside of their mind. Now, obviously, if everyone is here in the webinar, everyone is trading. And if everyone is trading, they might have seen the behavior of the markets every day. They could understand it. It's not that they don't understand it, it's that they don't accept it. What happens is, what I am speaking, you might have already observed that, okay, yes, he's right, that 5-minute bar came down but was not able to go down, came up. And my 5 EMA had also crossed. No, but what I was trading on a 15-minute time frame. There it was still a sell. And that's why I didn't buy. Okay, fine. That the first excuse accepted. Now it went up 30 points higher and went above your cost, but has not hit your stop loss. Now what happened? No, see, after I was getting 20 points, till then it was fine. Now I'm not getting anything, then might as well wait for the stop loss. Now, who stopped you from buying right when you realize that it has gone above? Your mind itself stopped you. No one else can command over you. Or maybe some influence. And influence can be multiple influence. The worst influence is social media. What I need to do is post a screenshot tomorrow on Monday in the morning, and I will write that some good name. What I have to write is maybe zigzag indicator, zigzag harmonic indicator. The moment I write that and show a profit, you leave your job, your trade is on, and you leave that and you start watching where is that zigzag harmonic indicator. If I get that, from tomorrow I will be in profit. So that day is gone. Not just that day, but you have put so much stress into that, and you don't even know whether that zigzag harmonic is existent or not. Now, after the market closes, the stress increases because in this due course, you have already lost that trade. So now you are looking back. If I would not have searched this indicator, today this 80-point trade is gone. Now, tomorrow I am not going to miss. Tomorrow I am going to get this 80-point trade. Next day market is not going to give that 80 points because now the market knows that there are many looking at that harmonic zigzag. Tomorrow market will rotate in a 20-point range. You will still enter the trade and you will do the same thing, you are losing. So now what happened? The day when your strategy was going to work perfectly, like it was your day, when market opened, it had already written on that okay, today your strategy is going to work and you will be rewarded. You didn't listen to that and you started watching others and you lost on your trade. Not just lost on your trade, you missed that opportunity which actually comes after each 4 trades. Which you would not have, your subconscious mind does not even know that your opportunity comes every 4 trades, but you have not observed it. So a mentor or a friend can guide you to find your drawbacks, but in the end, it is only you who can improve them. Like take an example, like I can find out that okay, somebody is looking to trade stock futures, somebody is looking to trade options. Now everyone is in search. See, the end motive of everyone is to make money. Simple as that. That if anybody wants to enter the markets, they are not entering for carrots. They are entering for making money. But who will find the drawbacks? Why the money is not coming is the drawback, and that is need to be mended and dealt with. So I can tell, okay, you are trying to trade stocks with this capital, not a good idea. Okay, you agreed that, and you don't want to do that. Second drawback I saw is that you are taking too much of risk. Don't take this risk if your stop loss is this much. Okay, you agreed to that also. But there may be other drawbacks as well, which you are not telling me. Going to the social media, leaving your trade is a drawback. You are not going to tell me that. Calling the broker, आज हिंदाल को अच्छा लग रहा है क्या, हाई के ऊपर ट्रेड कर रहा है, that is a drawback. You have a strategy in place. Why do you need to ask the broker whether Hindalco is good or not? If you have a strategy, probability is 50-50, just play it. Set goals, focus on them, and make it a habit. Everyone would be used to driving, or everyone would be used to watching TV. You don't need to find the remote control button every time you want to switch on the TV. In darkness also, somebody gives you your TV's remote control. You exactly know where the power button is. You exactly know where the volume is, because nowadays volume is more important, because mobile keeps on ringing in between. So you need to mute the volume. So that is the most, after earlier it was power button, now it is the volume button. So everyone knows that. But when it comes to trading, everyone tries to escape that, because that's the easy way. If you want to develop a habit of doing it the same thing right way every time, again and again, becomes too boring. And why to make it a habit? Because you want to escape that, you don't get any fancy in that. Now it all starts with you and ends with you. One of the reason for failure of most of the traders is, last time it had happened, so this time it will happen. Now I have striked off it will, because no, it is not going to happen. If last time it had happened and if this time it will happen, if it was that simple, again the same thing, it's programmable. Everyone can look at the same thing. We are not the only people who can look at it. The market is overbought, it cannot rally further. Again the same thing. The market is overbought, it can do anything. And that's why, did you know that the market is going to go overbought? No. Then why now you know that if it's overbought, it cannot rally further? And that is what is happening with Nifty. The market is overbought and it cannot rally further. So sell from 8,400. And by the time to sell comes, the account is not in a position to sell further. So then waiting to get back to the cost and first get relieved from that bad trade. It gets to cost. Now it's going to go 1,000 points more down. No, I don't want to stay. As it is stayed in this short for 3 months. Let me exit first. I have an indicator, it never fails, which is currently the delta divergence and order flow. Again the same thing. If it never fails, you would not be having that indicator, because I can guarantee there are 10 million people better than us who can get that indicator. So why just us? We should always think opposite here. So while receiving the losses graciously and the profits, we should always think that there are people losing more than us. So we are saved, at least we did not go in a loss. So while protecting the stops and protecting the capital, we should think in that way. But while talking about an indicator and being overconfident, we should always think opposite. That if it never fails, it will be with thousands of other people, it won't be with us. Now, if X happens, Y has to happen. So this is that confirmatory bias. If excess happens, the market has to reverse. If a balance happens, it needs to break out. If you have a buying tail, the market has to go higher. No. All that is a probability which we have visualized and which we have assessed. What might happen is completely random, and the feel, the first point which we talked about, that the feel of the market will help us in such situations. So if it was as easy as 2 plus 2 is equal to 4, majority of the traders would be making huge profits. The fact is, majority of the traders are not profitable. Now, when we talk about habit, I would recommend everyone to read Charles Duhigg's book, The Power of Habit, where he says a habit is made of three components: the cue, which is a trigger, whether conscious or unconscious, that starts the action; the routine is the action that is put into play as a result; and the reward is the outcome you consciously or unconsciously seek from the routine. So this looks like all nonsense, because it's a psychological subject. Why should a trader be discussing this? But end of the day, this is what will help. The cue, a trigger, there is the activity that you do. So the trigger can be a big profit, the trigger can be a big loss. Now you are not even aware that you are actually reacting to that, and that's why you are acting like this. So some people have a habit that back to back 5 good trades and the tweets never stop. It will be okay, this done, this target done, this target done. Now that action has started. That action that is put into play as a result. And same thing, the reverse is also a habit. Your tweets stop due to losses is also an action. Because what made you stop? The loss made you stop. So the loss was the cue, and that will become a routine. Why that behavioral pattern happens is due to this. Now, obviously this is psychology, that if somebody is knowing the psychology, he can make into 3 sentences, he can describe all this, because he has observed all this, and that is a fact. You can see people. There are many people who would give you calls for a few days, and the moment their calls start, the moment their calls do not work, they will stop sending you messages. Then you ask them what happened. Your call is in 50 points loss. No, but now their cue has triggered. They know that now about loss they cannot talk, so better not to reply. Slowly this will become a routine, and from that routine you are seeking a reward. So better to develop a positive trigger, that something good triggers your and motivates you to trade in a better way, to manage risk properly, to reduce that greed, because it's a patient game. You survive in the market for 5 years with a constant capital, not even interest on it. there is 99% probability that sixth year you will be profitable. But if you are in the market for 1 year and you have made 100% profit, is not a 99% guarantee that your second year would be profitable. Because if you have survived, that means you have already overcome all the bads. You are not getting into that routine due to a loss trigger. So when you develop that good habit, what will happen is it will become a routine, and the reward that you are expecting from that routine is profits. The ultimate aim is profits. Everyone's aim is profit. And for that, the first two, if they are set right, the ultimate outcome, whether you are aware or not, would be profits. So I think that's it with the slides. And finally, okay, it's 6:10. So luckily we were able to finish. I thought that like there are many things to talk, but also the people have like slowly started departing, because many today is a Saturday, and many would be thinking that instead of wasting time in this power of habit, let us go to drink. Thank you. Now, trading journal is completely a different subject, would require at least like 2 hours to talk about that. But see, journaling is not you are actually means that journaling is a good habit, that you are getting into that mindset of that is, so journal is your cue, that from there you will start to realize that okay, this is what I need to develop. So that journaling would be the cue to start, and the end result is that cue should lead to analyze your performance. So you are entering those trades every day, and then when you are doing that on a consistent basis, you will know your drawbacks. And just knowing drawbacks won't help, because your equity curve would show there. What you have to do with the journal is, only thing that you want to see there is, because the rest of the thing is strategy and your risk management. In journaling, you will come to know where you were going into a big drawdown, find out that mistake, and as soon as possible eliminate that. Cool. So thank you very much everyone, and you can send in a mail, you can send me a message. I will make a just I think there is in the last sheet there is one mistake in the calculation. So I will put that, and then few other sheets as well, because journaling, so I want to put just one part for a beginner. Professional general journal is not required in the earlier stage. So just one part, how to assess the trades and know what you are doing wrong. Cool. So yes. And again the same thing, like there are many thoughts, but again the time constraint, that to put it into like it should be like many days, then only it can happen. But anyways, if anybody can learn even a bit, then it's worth the time and effort. So Uh, Thank you and have a great weekend. Yes, but this has turned into GBs today. This is just below the VSA recording that I had done. But anyways, I will what I'll do is I'll keep to upload it tonight, so at least it goes in my this week's quota. Cool. So thanks everyone. Thanks again, and thanks for being there. And have a good weekend and a good trading week and month ahead.